watching Primetime. I'm Tamanna Inamdar.
And my name is Ayush Alabadi. Let's take a look at the headlines first. Bharti Airtel will take over Tata Group's mobile services business. The merger will be done on a debt-free, cash-free basis. Tata Sons CFO says the group won't get anything.
Macro cheer for the Indian economy. Industrial output rises the most in 6 months. Retail inflation unexpectedly slows down in September.
IT heavyweight TCS beats estimates in the second quarter, driven by client wins, digital services.
India's bad loan problem may be far from over. Asset reconstruction companies buy loans worth only 5,000 crore rupees in the July-September quarter.
Himachal Pradesh will go to polls on November 9th. The poll panel says that Gujarat elections will be held before December 18th.
And the Allahabad High Court acquits Rajesh and Nupur Talwar in the Arushi Talwar murder case, says the parents could not be held guilty on the basis of evidence on record. Well, the big story this evening, the wave of consolidation in the telecom sector continues. India's largest telecom operator, Bharti Airtel, will take over the struggling mobile services business of the Tata Group. The debt-free, cash-free merger will see Sunil Mittal-led company take control of operations and a small portion of Tata Teleservices' unpaid spectrum liabilities. It excludes the Tata Group's stake in tower firm Viom Networks. And now Soumit Sarkar summarizes what both the parties get out of this merger in this report.
So Bharti Airtel gets around 178.5 megahertz of spectrum, but the catch here is that of that 178.5 megahertz of spectrum, only 71.3 megahertz of spectrum is liberalized. Now this 78.3 megahertz of spectrum is in 3 different bands, that is 800, 1800 and 2100. 800 they have around 11 megahertz, and of 1800 they have around 15 megahertz, and in 2100 they have around 45 megahertz. Now along with this, Bharti Airtel will also get around 4 crore subscriber base of Tata Teleservices. Now this 4 crore subscribers will add around close to 5,000 crore on an adjusted gross revenue basis annually to Bharti Airtel's top line. Now the good thing about this deal is that Bharti Airtel will not take any debt that Tata Teleservices has, and it also need not to pay any cash to Tata Teleservices. Now but Bharti Airtel will also have to take in some small portion of unpaid spectrum liability. For Tatas will get to exit their loss-making, cash-burning telecom business. Now this telecom business has been losing market share over a period. Now there are in first quarter of financial year 2018, the market share was close to 6%, which was down from around 7-8% in the corresponding period last year. Now they also budget with Tata Communications, and also they get to keep 32.86% stake in Viom, which is the tower business of Tata, and that stake is valued at around 4,500 crore as of now.
Well, Sajid Manga joins us now. Sajid, now you've been talking with the Tata management, of course. Now, what are they making of this deal, and when do you think it's likely to be completed?
Okay, so the timelines would be roughly around 7 to 8 months as per Tata Sons Group CFO. We met up with Saurabh Agarwal, and he said that it will take around 5 to 6 weeks before the final shareholder agreement will be signed, and then once and in the same period you will have multiple things happening where the enterprise business will have to be merged with Tata Communications, so the board of Tata Communications will have to take a call on that, and then fixed line and broadband will likely to go to Tata Sky. So all these things will happen parallelly, and in that sense, by 5 to 6 weeks, at the end of 5 to 6 weeks, you have a shareholder agreement, and you have multiple agreements in place so that you can go to NCLT with the entire scheme. It will have to go there, and I think Tata Teleservices is registered in Delhi, so Bharti and both of them will have to go there because it's an asset transfer, but Tata Teleservices Maharashtra will be based out of Bombay. Saurabh Agarwal said that around 5 to 6 months is a given that NCLT will take to approve the entire scheme. But from November 1st onwards, the economics of how Tata Teleservices is going to act and how it's going to operate will move to Bharti. So it will be something which will be watched out for very clearly, how Bharti is going to take forward the entire entire consumer telecom business.
And there's nearly 4,000 existing employees at Tata Teleservices. What happens to them?
So, not only 4,000 employees, what about the debt as well?
Yes.
So you have around 30 to 35,000 crores of debt. Tata Sons expect to monetize a lot of assets of Tata Teleservices. Remember, the entire deal is about transfer of employees and their spectrum to Bharti. So the assets, whether it's fixed assets or anything else, or the Viom stake, which still remains with Tata Group or Tata Teleservices, will be monetized to some extent, and the debt will be brought down there. So they've said very clearly that the entire debt will be assumed by Tata Sons, and Tata Sons will ensure that all creditors are paid every penny. They will not be forcing any haircut on any of the lenders. So from that point of view, it is a good sign for many of the telecom lenders or state banks which are participating. There are around 38 banks and financial institutions who have lent to entire Tata telecom venture. From the employee point of view, they are around 4,000 to 4,500 employees which are there in the entire telecom business. Around 1,500 employees is something which will be absorbed, because if the enterprise business moves to Tata Communication and if the broadband business moves to Tata Sky, those employees are expected to be absorbed there. The question would arise is about 3,000 employees for running this business, because they already have 40 to 45 million customers with an ARPU of around 120 to 160 rupees per month. They would need some kind of employees, but there will be some rationalization that was not ruled out.
So there may be job cuts. Just because you had a chance to speak to the management at Tata Sons, where does this fit in the whole operation cleanup, Sajid, that of course Chandra has been undertaking? They've started with Tata Tele. Is there more to come? Did you get a sense of the big picture there?
We did get some picture there, because Saurav spoke about this at length, and you'll see the entire interview on BloombergQueen.com, the entire transcript of the interview which is there. He said very clearly that when Chandra assumed and when he came on board, the first three issues were on telecom. The fourth one was Tata Tele Europe, which has already been solved with a joint venture with ThyssenKrupp. So the first one is there, and then now they're going to go down the list. But they've been very clear about it, that they're going to streamline the operation, they're going to trim it, and they're going to make it more efficient for many of the companies. And Chandra has been very on record and on various agencies and platforms saying that his aim is to ensure that you have less number of businesses to handle and more profitable business to handle. That's what it is, and it's going that direction. So two big things have happened in the space of what happened, and telecom, which will take another 6 to 8 months for entire thing to close. But these are big moves for the Tata Group.
Another big step towards trimming the fat. Thanks so much for that, Sajid Mangat. And we're going to talk more about this big story, because it seems consolidation is the only way for Indian telecom, and the big players are quite aware of it, as the Vodafone Idea merger is in the final stages of completion. Kumar Mangalam Birla says the sector will only see a handful of businesses surviving. Speaking to Bloomberg, Birla said, and I quote, "The telecom sector is undergoing a very turbulent and difficult phase. Probably the fittest three will survive." And we seem to have that big three shaping up. We're talking more about this evening on Primetime Debate, where we're asking how the big three players are now looking. We'll do a SWOT analysis on who could come up on top and where the sector is now headed.
But of course, all of that on Primetime Debate. But moving on, India's factory output surged in August as manufacturing activity bounced back a month after the implementation of the goods and services tax. The recovery was led by a pickup in electricity generation and favorable base effects in refinery products and coal production.
Now, according to data from the Central Statistics Office, the index of industrial production rose 4.3% in August from the revised 0.9% in July, as dealers and wholesalers began restocking inventories following the implementation of the goods and service tax. Mining output rose 9.4% in August compared to a 4.3% contraction it had seen in the same period last year. Manufacturing activity improved at 3.1%, while electricity generation rose 8.3%.
Some macro cheer ahead of Diwali, as in the inflation rate remains unchanged at 3.28%, well below the RBI's medium target for 4%. Now, CPI data also showed that food inflation cooled to 1.25% in September, slower than the 1.52% in August.
Now, the inflation figure for August, which was earlier reported at 3.36%, was revised down to 3.28% as well. Pulses, because of inflation, contracted by 24.4%, while vegetable inflation cooled off to 3.92% from the August reading of 6.1%. Fuel and light and housing inflation, though, rose sharply. And I'll talk more about the macro picture that we're seeing. We're joined now by Upasana Bharadwaj, economist at Kotak Mahindra Bank, on the phone line from Mumbai. A very good evening to you, Upasana. What is the picture that we're seeing? We're seeing some cheer. Is it sustainable, especially when we're looking at IIP?
I guess if you look at the IIP numbers, definitely for the time being, this reading is much higher than our own estimates of 3.5%. And clearly, we were expecting a rebound in electricity, given that the core infrastructure index had already revealed that. A little bit bounce back because of coal and fertilizers. It was already reflected, that we were already expecting a relatively strong comeback of the, if you look at actually the numbers, August and September, probably the month gone by for the next reading that we'll get. I think one is exports are showing a little bit early signs of improvement. That is there, along with the fact that, the pre-GST rundown that had happened of inventory, that pace of build-up has to happen. And also, we also have the festive-related build-up of inventory. So I think all of this taken together, August and September are likely to be a good month in terms of industrial production. Having said that, as we go forward after September, that's when the true test of the numbers would be, because after that, we'll have to see exactly whether it is really sustainable or not, because, we have to keep that into mind that the GST-related initial hiccups that are there, of course, that has impacted the SME sectors. A couple of measures are being taken by the government to tackle those measures, but it will take time before the activity really normalizes. And that is the reason why we are wary on the forward-looking industrial production data yet. So after a September uptake, we are still not very sure how that's going to sustain going ahead.
Right, Upasana, and also when you actually break down the numbers and you look at, the growth of consumer durables at 1.6%, would you say that was, quite low?
Largely consumer durables, we were looking at the automobile sector, and that clearly has done very well in the previous quarter. And that is something which we were expecting a much higher number there. And that has actually remained relatively subdued. Instead, we've seen that the non-durables has surged. And within non-durables also, if we see the breakup, then the second biggest contributor to IIP has been the enzyme category, which has now become the most volatile component. So barring that, the non-durable component is also not very good. So overall, the consumer segment is not really as good as what we were expecting to be.
All right. Upasana, a quick question on the CPI numbers. Some softness there in inflation. Does it give more room to the Reserve Bank when it looks at a possible rate cut?
No, I think here we have to, take cognizance of the fact how the inflation trajectory is as we go ahead into 6 to 9 months or probably 12 months ahead. And, RBI has already laid out its future inflation trajectory, and that's like suggesting that they are moving towards about 5% toward the end of next financial year. So I think clearly, and that is the trajectory without the state's implementation of 7 CPC. So the overall trajectory is upward. And in that context, if growth was to remain where it is, if it doesn't weaken any further, deteriorate any further, then I think that leaves very, very limited room for RBI to act at this point in time. So growth has to surprise really negatively for RBI to act at this point in time.
All right, Upasana, thank you so much for joining us on Bloomberg Quint. On to the big corporate earnings now. Tata Consultancy Services' quarterly profit rose more than expected as India's largest software services provider added clients and earned more from its cloud services. A net profit for the quarter ended September and rose 8.4% over the previous 3 months to 6,446 crore rupees. The consensus of analysts tracked by Bloomberg had pegged the profit at 6,284 crore rupees. Now, revenue rose 3.2% to 30,451 crore rupees, in line with estimates, of course. Agam Vakil of Bloomberg Quint breaks down the numbers in this report.
Well, TCS has posted earnings for the second quarter largely in line with street expectations, starting off with revenues which have grown by as much as 3.2% in dollar terms as well as rupee terms. Well, its margins have expanded substantially to over 25.1%, which is higher than what the street was working with. Consequently, its profitability has moved up by as much as 8.4% quarter on quarter at a little over 6,400 crores. Now, what has worked for TCS this quarter? Its volumes growth, up as much as 3.2% on the back of large uptick in large deals. And we've also had the management say and suggest that the weakness in retail has bottomed out, and from here on they can expect more momentum to build in that particular segment. When it comes to the banking, financial services and insurance sector, that is the one which contributes over 40% in revenues to TCS, that has moved up by as much as 3.7% in terms of revenue growth, and this again is something that the investors may take as a positive, considering the fact that the entire industry has suffered from slackness in demand in this particular segment. Finally, the digital services, have contributed as much as 19.7% to the overall revenues, and the management has suggested that the fear of the financial technology coming in and disrupting banking and financial services is done with, and they are well past that, and that is also the reason why the banking financial services sector has done much better in general. On the whole, a steady set of earnings for TCS.
Rajesh Gopinathan, CEO of TCS, expects an uptick in the retail space in the second half of the year. Gopinath adds that the fear of financial technology companies is over.
The industry had gone through, the BFS industry had gone through this era of being under threat from what is called as the fintech players, and this assumption that fintech will somehow disrupt this whole ecosystem. I think we are past that. Almost everybody realizes that fintech will be one more component in the ecosystem rather than disrupting the large players inside that. We think that retail, we definitely should see a uptick from where we are.
I think we have always maintained we stay focused on that goal because I think structurally we still have the ability to work within that. We have expanded in this quarter for instance, from the BFS and the retail, as the growth is higher than where we are today. That will aid that journey.
All right, Urmil Shah, research analyst at IDBI Capital, now joins us on the show to break down and analyze TCS's quarterly performance. Urmil, thanks so much for speaking with us at Bloomberg. I'd like to start by asking you, if you go through those numbers, what are the key standout areas for you?
So the most important standout area is the improvement in EBIT margin, which was at 170 bips on a QOQ basis. This was in line with our expectation because we believe that TCS is the best, as regards management of profitability when there are less headwinds in this quarter. So if you see in this quarter, clearly INR versus dollar was flattish, and plus there was no impact of salary increase or visa cost as it was in the previous quarter. So I would say the main highlight for us for this quarter was the EBIT margin performance, and the second one was, which they have been doing in the previous quarters as well, was the growth in the digital services, which came at 30% plus on a YOY basis. So I would say these were the two important parameters which came out in this quarter.
Okay, Urmil, management talks about their optimism in the BFS space as well as retail. They say it's bottomed out and they only see an uptick from here. What is the sustainability in your view?
So they have called out that retail has been seeing soft quarters for a time now, and it has bottomed out, and clearly third quarter is where they are expecting a growth to pick up. So we believe that retail is an area which could see a uptick from third quarter onwards, unless and until the festive season in the US is again tilted more towards online and not brick and mortar. As regards BFSI, and I would break it into BFS and insurance. Insurance is one area, given that the recent deal win as well as the deal pipeline, we expect insurance to improve in the second half. As regards BFS and specifically in the US, we believe the uptick would actually start in the next year. And BFS in Europe is where we would see growth coming in. So this was our view on BFS and retail.
Just one last quick question on the margins, Urmil, because they've come in better than expectations. Management says 26 to 28% is what they look at. Is that optimism warranted?
So clearly we are not expecting that aspirational margin band to come in FY 18 or even on FY 19 basis, because we believe that TCS would continue to invest in new technologies, digital mainly, and growth needs to really pick up upwards of double digit for them to get back to that margin levels, which is something which we are not forecasting right now in FY 19 as well. So our outlook is more sub 25% for both the years.
All right, thanks so much, Urmil, for joining us on Bloomberg Quint. Now, moving on, well, IndusInd Bank has delivered a stable set of numbers in its September quarter. Net profit and net interest income grew 25%, while the asset quality remained stable. The gross NPA was unchanged from the previous quarter at 1.08%. The slippages fell by 50 basis points to 2.2%. Romesh Sopthi, CEO of the company, said the NPAs made a negligible impact to the earnings in the quarter. Listen in.
The impact of those 28 new accounts which have been referred to NCLT. So we're talking of 40 accounts over 2 quarters. And as we told you last quarter, when there were 12 accounts, it hardly moved the needle for us in terms of additional provisions, because we had 6 accounts out of these 28. And they were already classified as NPA and almost fully provided for. And the total impact of these 28 new accounts on our provisioning for this quarter was about 36 crores.
And Indian markets ended at their highest level in 3 weeks. Both the Nifty and the Sensex clocked gains over 1%, with the Nifty ending just a notch below 10,100 levels. Broader markets also put up a strong show. Index heavyweights RIL and HDFC Bank led the rally. Pradeep Pandya sums up the day's market action in this report.
Well, a volatile day for Sensex and Nifty, but towards the end, all the indices inched up, and we closed very, very, very close to the day's high. So that was on a positive note. If you look at it, the Nifty was quite volatile, but Bank Nifty was the one where we saw most of action today. Early on in the day, when there was pressure on Nifty, it was actually because of Nifty Bank that cracked and it breached 24,000 mark for a while, but recovered almost 400 points from day's low and closing the day with a gain of 1%. Nifty also inched up with due contribution from some banking heavyweights during the day today. If you look at mid cap and small cap, there was broad-based buying interest, and interestingly towards the end, if you look at the last hour of trade, the market breadth actually widened in favor of gainers. So there were more gainers than losers in today's trade, and also in the last hour of trade there was significant buying interest that re-emerged in a large number of mid cap counters. So that was another sign of strength, so to say. Well, the heavyweights that contributed in a big way, RIL ahead of the quarterly numbers that is expected tomorrow, and HDFC Bank led the gains in overall banking sector, although some more heavyweights like SBI and ICICI didn't really participate in today's trade, but IndusInd Bank did, and that was after the quarterly numbers. This stock actually closed at day's high, so that was a significant positive. Edelweiss was the leading NBFC. So overall financial services, that is the sector which has been lagging for last few sessions, and that was actually a drag on Nifty, but this sector today came ahead and actually led the rally. Some of the sectors or stocks to talk about, Hindalco and sales, so ferrous and non-ferrous, both the segments in metal space were doing well on the back of strength in commodity markets. You also had FMCG stocks gaining today. Britannia and Dabur would be the two key names to talk about. Also retail stocks, Avenue Supermart, another new high for this one, now inching towards 1300. And also if you look at Shoppers Stop was doing well. Man Industries, that was a significant mid-cap mover. Company has received a big order from Gas Authority, and NBCC moved up today with a positive buy recommendation with significantly higher targets from current level.
Now, stressed asset sales may be slowing down. Asset reconstruction companies bought assets worth just about 5,000 crore rupees in the last quarter, which is a drop compared to the first 3 months of this financial year. Vishwanath of Bloomberg Quint, who's been speaking to bankers all day, joins in to tell us why has there been this drop. Vishy, this can't be good news for banks, surely?
Not at all, Ayush. Not just banks, even the asset reconstruction industry, which depends on these sales to conduct their business. Now, during the first quarter, the sales were about 6,000-7,000 crore. The second quarter has been slightly lower, but the issue is that the dip in sales has been a constant phenomena for the last few years. Now, in August 2015, the RBI introduced something known as the 1855 norm, where the 1585 norm, wherein companies had to put up 15% of the asset value upfront in cash, and 85% they could issue security receipts. Later on in September, they changed their norms again and said that all cash deals are more preferred, which pushed banks to be tougher when negotiating with these companies, and the companies themselves became more selective in the assets they buy. The issue is that the Indian banking system is struggling with a very large NPA problem. It's over 8 lakh crore just for the listed banks. So if they're not able to sell these assets off to asset reconstruction companies, they can't really turn around and come back into the system or have a better, stronger balance sheet. And the ARCs themselves will not have any business to run at all, and therefore won't be able to earn any money or be sustainable for that matter.
All right, thanks so much for that. Vishwanath Nair there with that exclusive report. And for more details on that story and a lot of the other news that you may have missed today, there's only one place you need to go. That's BloombergQuint.com. You will get details on all the stories we've done today. You can watch the show if you've missed any parts of it, and of course, a lot of analysis there. And the Election Commission has come out with dates for the poll-bound state of Himachal Pradesh today. They also said that Gujarat Assembly elections will be held before December 18th, even though the poll panel did not specify any date for Gujarat. Himachal Pradesh will go to polls on November 9th in a single phase. The counting of votes for Himachal Pradesh will take place on the 18th of December. The chief election officer noted that bulk SMSs and voice messages on phones will be monitored ahead of the election, even as the BJP and Congress step up their attempts to win the two states.
All right, in big national news, a division bench of the Allahabad High Court has pronounced a verdict in favor of parents Rajesh and Nupul Tarwar in the Arushi murder case, which had rocked the nation in 2008. The court has acquitted them from the charge of murdering their teenage daughter, saying they could not be held guilty on the basis of the evidence on a record in this case. The verdict brings an end to the Talwars several years in prison after a CBI trial court pronounced them guilty of killing their 14-year-old daughter and their house help Hemraj. The CBI has said it will study the High Court order and decide its future course of action. The doctor couple is expected to be released from Ghaziabad's Dasna jail tomorrow.
And I will be talking with Pinaki Mishra. He is the advocate for the Talwars and of course has been with them through this entire journey. We're going to be speaking to him on the legal nuances of this case ahead on Primetime Debate at about at 20 odd minutes from now. Of course, our first debate will focus on the consolidation in the telecom space. All of that coming up after a very short break, so stay tuned, don't go.